number 1, never lose money. Rule number 2, never forget rule number 1. Price is what you pay, value is what you get. The cynic knows the price of everything and the value of nothing. If the business does well, the stock eventually follows. Buffett is known for his wise and philosophical views on investing and life. His quotes inspire investors and entrepreneurs around the world. This modest and unassuming fellow has repeatedly been ranked among the richest people on the planet.
If you find someone who's clearly a fit, then fine. Just make sure they fit real good. No more manager turnover. Don't mess this up, Jim.
Can you do any better on salary?
Unfortunately, that range is set at corporate.
What about mileage when I use my car? I mean, gas ain't cheap, you know.
We think that 25 cents a mile is pretty generous.
How about 27? And when I make long-distance calls, will they be monitored or is it on the honor system?
His holding company, Berkshire Hathaway, former textile company, delivered a 24% annual return under his inspired leadership for 32 years. Many believe this is the best performance ever in the industry. What companies make up Buffett's Berkshire Hathaway portfolio? Apple is the most prominent position in the portfolio, accounting for 48%. The other companies do not exceed 10%. It is Bank America, American Express, Coca-Cola or Chevron. The fund has a capital of a whopping $325 billion, holds 48 companies and is up 9.8% year to date. What is the performance of Berkshire Hathaway relative to the broad S&P 500 index?
There's no, if I had a choice today for a 10-year purchase of a 10-year bond at whatever it is, or 10 years, or buying the S&P 500 and holding it for 10 years, I'd buy the S&P in a second.
We can see the progress of the S&P 500 chart in red and the price performance of Buffett's Berkshire Hathaway in green board. As can be seen, so in the period shown between 2010 and 2023, most of the time the BRK title beats the S&P 500 handily. Buffett and his mentor Graham agreed that investment is the opposite of speculation. According to Buffett, investing requires methodical action, patience, self-control, and the elimination of emotions, which are the biggest enemy of investors. Speculation, on the other hand, focuses on short-term gains and is associated with the pursuit of quick money. I recently compiled a video about Benjamin Graham's mentor, Buffett. You can find it at this link. How can we approach the spirit of Warren Buffett and understand his investment approach? Buffett did not write a book explaining his investment method. However, to understand his investment motives, we can use his annual Berkshire Hathaway newsletter and especially information from the book Buffettology, written by his daughter Mary. What stocks does Buffett find attractive? A stock must meet several criteria. The main requirement is that it be predictable and understandable. Buffett does not invest in companies he does not understand and does not consider worthy of his money. That's why, for example, he avoids technology companies and prefers to invest in manufacturers of diapers, soft drinks, razors, carpets and ice cream. Another reason Buffett does not like to invest in technology companies is their short life cycle and the unpredictability of the future. These companies often require large capital expenditures and investment in research and development, which is not Buffett's priority. Surprisingly, Buffett invests in financial institutions, even though they are generally opaque and rely on borrowed capital, which is not his habit. Central to his investment approach is the concept of consumer monopoly, a market position that, while it may not be a literal monopoly, implies a virtual untouchable market position for a given company. This position can be secured by a strong brand which embodies stability and does not allow rapid seduction even from competitors with large financial resources. Classic examples are companies like Coca-Cola, McDonald's and Hershey's. However, brand is not the only factor that can make a company virtually untouchable. For example, the lowest cost, e.g. Geico, a car insurance company, or the highest quality, e.g. flight safety, a pilot training company, can also contribute to untouchability. According to his daughter Mary, what other things does Buffett enjoy? Buffett prefers to invest in companies that make products with rapid wear and tear or consumption, such as toothpaste and razors. Services with a repetitive nature, such as cable networks, local newspapers or credit card companies. Companies that have the ability to absorb increased costs as prices rise, thereby protecting their profit margins. Companies that don't need significant capital expenditures. Companies with strong management that are not dependent on one dazzlingly successful person. Buffett had an interesting take on Apple during Steve Jobs' tenure because he considered its business too complex and risky to understand. But he is pivoted and Apple is nearly 50% of the largest position in his Berkshire Hathaway fund. Companies that buy back their own stock. This shows that the company's management, like Buffett, sees the company as a great investment. These criteria are important to Buffett when making investment decisions and help him identify companies with long-term growth potential and stable returns. What does stock selection look like according to specific criteria? Excerpt from Buffettology. Return on equity (ROE) over the last 10 years should be greater than 15%. The 10-year earnings per share growth rate divided by retained earnings over the past 10 years should be greater than 12%. Free cash flow greater than 0. Debt less than 5 times annual earnings. And earnings are growing steadily. Buffett favors companies that have positive free cash flow and avoids companies with negative free cash flow, especially if they are forced to invest large amounts of funds just to be sustainable. Another criterion is intrinsic value. This is the compound return on investment, which is calculated over the next 10 years. It uses the discounted cash flow (DCF) method for these calculations. Buffett has a fairly clear idea of what the company will be worth in 10 years. So what does Buffett look for in a nutshell? Buffett is looking for undervalued stocks with long-term growth potential at an attractive price. He prefers companies with long-term stable and predictable earnings resistant to market changes. He prefers companies with low debt and high return on equity and assets. He looks for companies with a sustainable competitive advantage and long-term growth potential. Buys stocks at a sufficient discount from their intrinsic value to reduce the risk of loss. Similar to Graham, he uses margin of safety to do this. These criteria help him identify stocks with long-term growth potential and a good balance of risk and return. These stock selection strategies have been violated many times by Buffett. Buffett has had a lot of experience and his selection process may involve more intuition than a well-defined model. Experts know that intuition often plays a key role with experts, as described in the book Blink by Malcolm Gladwell. It is also possible that Buffett has modified his criteria somewhat since the publication of Buffettology in 1997. However, one thing is certain. The selection described here is very similar to Buffett's final strategy. If you invest in stocks that meet these strict requirements, you have probably made a good purchase. We have illuminated the basics of Buffett the investor, and now let's look at the experiences that shaped Buffett's life. Buffett's life and early years as an entrepreneur. Warren proved to be a true entrepreneur from the start. At the age of 6, he started trading Coca-Cola cans, and at the age of 11, he bought his first stock. When he sold it at a profit, he realized he could have made a bigger profit if he had waited longer. This moment taught him an important lesson in patience when investing. As a teenager, he invested in land and rented out slot machines, which allowed him to build up $10,000 of equity when he graduated from school, which would be equivalent to over $100,000 today. What was Buffett's defining moment? As soon as he got his hands on a copy of Benjamin Graham's book, The Intelligent Investor, his previous life changed. He immediately became interested in Graham's teachings and enrolled at Columbia University, where he became one of Graham's most important students. I made a video about the book The Intelligent Investor. If you want to learn more about it, click the link. Buffett began working for Graham but soon decided to go into business for himself. His partnership returned 29.5% per year until 1969, while the Dow Jones Index returned only 7.4% over the same period. Buffett's ability to value companies was on full display through his holding company Berkshire Hathaway, which began as a textile business and now owns stakes in more than 70 companies. Over 32 years, Buffett has achieved phenomenal results with an annual return of 24%. Warren Buffett lives modestly and shows no interest in luxury mansions, fast cars or extravagant lifestyles. Although he has a second marriage and travels by private jet, these aspects are more a part of his status and practicality. Like his mentor Graham, Buffett represents a model of conservative and healthy capitalist who emphasizes traditional values and shows no sympathy for the pursuit of quick profits. 6. The richest man on the planet. Buffett, born 1930, is the 6th richest man in the world with an estimated fortune of $115 billion. Yet Buffett hasn't changed much, still living in the same house he bought 50 years ago for $31,500. If you've looked this far, you have to admit that Buffett is a personality. Few mortals get to experience such a life story. Personally, I like Buffett mostly for his restraint, humility and wisdom. That's the kind of grandfather I wish I had. Buffett is a living legend, and at 92 he has an incredible life energy that has led many to invest for the long term. Have a great time and invest wisely, ideally the way investment titan Warren Buffett does.